Good morning, everybody. Good morning, everybody. This is the live market open for Thursday. It's January 21st. It's ECB day. It's the Draghi show. So this is the live market open. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the shows every morning for FX Street. As usual, we'll talk about recent developments. And yesterday was a very, very busy day, not only for Canada, various charts and levels. The next 24 hours, and of course Draghi is the main event, and of course your questions. So if you cannot see the chat box alongside the video, please go to the address on the screen, tlk.io/fxstreet-forex-live-video. So what did we have yesterday? First of all, let's begin, well, from the top. We had UK wages slow down, more or less as expected. The X bonuses and including bonuses, they both slow down. But also the unemployment rate went down to 5.1%, very low, and also the number of jobless claims for December went down. This allowed the pound to stabilize just a bit. Okay, see the British pound. So we had a crash of the British pound in previous days. We had so this is because of what Mark Carney said about this is not the time to raise rates, and we found the bottom. And since then, we managed to find some stability. 142.25 works as resistance. Currently 141.65, 141.20 is some kind of support. So this good news from the UK allowed the pound to find some support for now after the huge crash. The trend remains to the downside, but at least it didn't fall too much. Okay, see a question here from Angel. Is it 4 Eastern time? Because email says, but now the page is... the Draghi show, the press conference by Mario Draghi begins at 1:30 GMT. Okay, that's Eastern time. No, it's not 4, it's 8:30 Eastern time. Okay. Anyway, let's continue what we had there. So we had some stability in the pound for a change, right? Then we had core inflation come out in the United States. The headline figure was okay. It was 2.1%, but that was better than last time and as expected. Other figures were a bit mixed. For instance, the headline figure, which was supposed to see the base effects of the falling oil prices seen last year move away, means headline inflation, despite the recent fall in oil, should have gone up a bit. It went up a bit, but less than expected, from 0.5 to 0.7 and not 0.8. So it was a bit mixed. And also housing figures were mixed. Building permits went up, but came out better than expected. And housing starts lower than expected. Okay, so it was sort of a mixed bag over there. Okay, now we have... we had the main event of the day, the decision by the Bank of Canada. Okay, they surprised, not totally surprised because it wasn't a full consensus, but they decided not to change interest rates. Okay, they were expected to cut the rates by 0.25% from 0.5 to 0.25. Dollar CAD. This is the big reaction. This is the big fall. Okay, boom! It fell all the way here. In a range of over 200 pips. Since then, it managed to bounce back up, but then it began another gradual fall. Okay, what did the Bank of Canada say? And this has implications. Not only, I know that many of you are not trading the Canadian dollar, but I think it's still important. Okay, the Bank of Canada said that it's waiting for action from the government because it got a hint from the government. There's a new government in Canada. New Prime Minister Justin Trudeau, new Finance Minister Monroe, and they're expected to announce some kind of stimulus. Okay, this could be seen also in other parts of the world. Also, the ECB is calling on governments to do more. Okay, it's not asking for stimulus directly, but it's asking them to do more in terms of reforms. Also, the Bank of Canada didn't ask anything specific, but it got a hint that the government is going to do some action, and that they came into the meeting with the bias to to ease because of the situation. But first reason is that the government is expected to announce some kind of stimulus, and the second reason is that they did mention the weakness of the Canadian dollar. It is already helping balance the economy. It is also helping lift inflation, okay? Because the Canadian dollar is so weak, that means that imported goods are more expensive. So there's no need for the Bank of Canada to add more monetary stimulus, okay? Of course, if the Canadian dollar strengthens too much, they could, of course, reconsider. And if the government doesn't deliver, same goes. But well, the Canadian dollar fell so much that they decided not to act. Of course, yesterday it wasn't the end of it. We had the fall and then a bounce. Also had oil prices reaching new lows, and that also made a difference. Anyway, we fell to support right here at 144.40. And now we're back around 145. Oil prices did crash yesterday to lower levels alongside stock markets. They fell below the 28 handle. Yesterday they went all the way to 27.55 and now currently battling 28. The trend remains down, but there are some bids as well. What happened yesterday in Wall Street? It's also important to mention. Stock markets have been crashing for quite some time. And yesterday was one of the best examples. It fell a lot. Okay, I don't remember the percentage points, but it fell below the October 2014 low, up to the levels last seen in February 2014, nearly 2 years for the S&P. But at the end of the day, we had this kind of bounce back. That's why I said maybe the worst is behind us. Now, Asian stock markets did fall again, but perhaps not as much. And oil prices managed to stabilize, so maybe we are seeing another correction. Is this the end of it, or is this just a correction within the ongoing downtrend of stocks, oil, commodity currencies, and the strengthening of the yen? I'm not so sure, but at least it's we had someone hit the brakes on the crash. Okay, let's see if we have another question here before we move to other events. Yeah, refresh the browser to watch the video. The show, yeah, the show begins at 4 Eastern time. Yeah, I guess so. It's 8 GMT. Can you explain what is stimulus? What are the technical measures adopted that refer to stimulus? Well, stimulus in Canada's case and many other countries' case, in terms of government stimulus or fiscal stimulus, it means taking up more debt to invest in infrastructure in many cases, or in general to reinvigorate the economy, okay? That's what the United States did, Obama did when he just entered office. And that helped stop the financial crash, okay? The Eurozone went the other way of austerity, and growth in the United States is looking, in general, the output in the United States is much bigger than in Europe. Of course, if you enact too much stimulus to get into too much debt, that's a whole question, different question. Anyway, let's get back to the events we had yesterday. It was a very dramatic day for the Canadian dollar. Today we will have more from Canada because I think I confused yesterday, but today actually we have it delayed. The crude oil inventories, they're expected to rise once again to show there's just too much supply. In addition to worries about demand from China, we have, of course, too much supply. Even before Iran came online, Iran just another fuel to the fire, if you wish. And so we'll have that from Canada. More news from overnight. The bank, also from yesterday, I think I told you that the Japanese yen is strengthening a lot because it's safe haven. Something I repeated, well, almost every day. And look at the trend. It's a stronger yen all the time. And finally, yesterday we had a drop under 116, just a bit. And even before the drop, as the Japanese yen continued strengthening, we began hearing different tunes from the Bank of Japan and the Japanese government. First of all, we heard from the Bank of Japan that they're watching closely currency markets. Okay. Then we heard from Shinzo Abe, the Japanese Prime Minister, that the time is right perhaps for more stimulus from the Bank of Japan. Now I'm talking about monetary stimulus, not government stimulus. That means that the Bank of Japan could print more money, could buy more Japanese bonds, basically weakening the Japanese yen. Okay, they're feeling a bit uncomfortable with what the small devaluation that China did and the strengthening of the yen basically against all currencies. When it's stronger against the dollar, it's almost unchanged maybe against the euro, and also they're strengthening a bit against the euro, and of course strengthening much more against Australian dollar, Canadian dollar, other rivals in Asia, all the emerging markets there, Malaysia, Indonesia, Korea, and Russia, Brazil. So the Japanese yen is the king, which is good if they want to buy goods from outside. But the goods that they're buying from outside are mostly oil imports, and oil is very cheap. So they can allow for a weaker yen, also because oil is cheaper and also because they want their exports to be competitive. So on this, all this talk from the Bank of Japan and the Japanese government, and we're talking here about top officials, we had some rebalancing in the yen. Dollar yen went a bit up, currently battling 117. Again, moves a lot alongside stock markets. All right. So it's not only what the Bank of Japan did, but also this rise here is some kind of when we had the correction, and then a fall when we had Japanese stock market fall this morning once again. So it's a lot risk on, risk off also for the Japan, but at least Japan is fighting back just a little in these global currency wars. Okay. What else do we have overnight? We had China towards the Chinese New Year, and because of the deteriorating financial situation, they injected the highest amount of cash, highest amount of liquidity in 3 years. That also acted to soothe some nerves over there in China and for the global economy as well. All right, so we had that as well. That also helped stabilize a bit, stabilize things just a bit, together with the bounce back in Wall Street. Will this continue or not? It's an open question. I think 2 days ago, when I talked about the Chinese GDP, that it was not as terrible as expected, and the markets bought it temporarily, and that didn't last too long. Of course, it was very temporary indeed, very short-lived, and then we had a renewed crash. In general, the mood remains sour. Okay, today we have nothing of worth mentioning during the European morning, but towards the end of the European morning, that's when the big action begins. At 1:45 GMT, when there's the ECB decision. Okay, no change is expected. The European Central Bank is expected to leave the lending rate at 0.05 and the deposit rate at a negative minus 0.30. It lowered the negative deposit rate last time. The big event is, of course, the Draghi show, or in more politically correct terms, the ECB press conference led by ECB President Mario Draghi. He always moves markets. We'll begin on FX Street. I'll be joining Mauricio, Valeria, Dale for a coverage of the show at 1. I think maybe the show begins earlier. Anyway, stay tuned to FX Street for a live coverage of the event. Should be very interesting. And we'll do a preview shortly. I'll just talk about other events. 1:30 GMT, jobless claims in the United States expected to fall just a bit. Philly Fed index is expected to be terrible, but we all know that manufacturing is bad in not only the United States, but elsewhere. At 4 GMT, we have the delayed crude oil inventories that I mentioned earlier. And then this is already tomorrow morning, just before the show, Draghi talks again. So I just mentioned it because, well, it's also worth mentioning. Now let's look at euro dollar and talk about the ECB. Okay, euro dollar is very much stuck in range for quite some time. 108.94 is the level that greets us right now, around the battle line of 109, which worked a bit like resistance, but not anymore. 109.50 is strong resistance, very choppy. 110, 110.70. On the downside, we have 108 and 107.10. Okay, let's zoom out just a bit and see when we had the biggest move. That's right here. Okay, this big jump here. That's December 3rd. That's the last ECB decision. Okay, what happened then? We had in October, the ECB, Mario Draghi, talking about going big in December. Then we had more speeches from him, from other members, not everybody, but we had more hints that the ECB is going to do a lot. Okay, now expectations stood on cutting the deposit rate from minus 0.20 all the way to minus 0.40, for example. Of course, everything is speculation, but enlarging the amount of QE, the amount of monthly bond buys from 60 billion to 70 or 80 billion. Okay, eventually they cut the deposit rate just a bit, just 10 basis points to minus 0.30, and no new QE. What they did announce, but was largely ignored by markets, is that they announced that they'll reinvest the proceeds. So for every euro in bonds that matures, they'll buy another one. That means they'll maintain a high balance sheet. Actually, that's what the Fed does even to this day. It ended QE back in October 2014, okay? A year and a half ago. Well, year and 3 months ago. And since then, but it maintains the level of the balance sheet. But that was not enough for markets. It's not what they wanted to hear. Euro dollar jumped from the lowest low was 105.20 all the way to 109.80. The biggest jump in 6 years or 7 years, okay? That was amazing. Since then, we had a bit of fall, a bit of a rise, but all in all, we're stuck a bit in range. On the following day, Mario Draghi began talking about, tried to do some damage control, explained that what the markets ignored, the reinvesting of proceeds and the extension of QE, together everything is worth 680 billion euros. Okay, a lot of money. And if you take away these 6 months of 60 billion, you have actually, was the calculation, 320 billion in additional stimulus over 16 months. That's another 20 billion per month. If you want to look at it that way, of course, it's not exactly what's going on, but you might do more damage control today, but he has quite a few dilemmas. Okay, let's see what Draghi does today. Okay, so yes, no changes expected today. As I said, what is expected is some kind of hints towards what he'll do in March. Why March? Because the ECB releases new forecasts only once every 3 months, only once every second meeting, exactly like the Fed. They have 8 meetings a year, but the more important ones are, there's only sort of 4 important ones, because for the Fed it's accompanied with the press conference, and also fresh forecasts. For the ECB, they're all accompanied by press conferences, but not always new forecasts, okay? And of course, they have to see the measures. Now, what can happen? What can he hint today? He can hint that he can say nothing. Okay, we're looking for the measures we announced to be reflected in the economy. Monetary policy takes time. We're expecting the governments to do more. We're already doing enough. The fall in oil prices, of course, impacts our target and makes us miss our target. But, you know, that's life. It's external factors. We cannot do anything about that. In this kind of scenario, a very hawkish one, a very laissez-faire, I mean, let it be sort of scenario, euro dollar jumps a lot. That means the ECB is not close to announcing anything new, and perhaps it's done for the year or so. Okay, in that situation, euro dollar jumps. I see it as unlikely. The other extreme is that, of course, they can always surprise with announcing something today, or saying that in March they're absolutely vigilant to do more, like he said in October. Strong vigilance. This is an important phrase, an important keyword, vigilance, and that the situation has deteriorated, that oil prices are getting into core inflation, that the recent fall in inflation, we did see inflation fall. I mean, it came out worse than expected. That they're ready to fight that. That yes, governments need to do more, but we'll do whatever it takes. Okay. In this case, of course, euro dollar will crash. This also has a weak probability. We have a better probability of seeing some kind of mixed message. Draghi usually knows how to play it. In December, he created expectations which were too big, and he missed them. Okay, and he would not want to risk his credibility once again. Not make huge hints the markets either will not believe him, and that will be a huge disaster, or he will again under-deliver in March. So he wouldn't like to do that, but he wouldn't like also to allow the euro to rise too much, okay? Because there's a global currency war. I just spoke beforehand about the Bank of Japan, and China is devaluing the yuan. The Bank of England, we heard earlier this week from Mark Carney, he hit the pound hard. Okay, didn't talk directly about the pound too much, but the result of his dovish words hit the pound. All this, I think, could result that Draghi will not let the euro strengthen too much. He'll have some mixed message. It's also important to remember that he's not alone there. He has a few, I think most of his colleagues are on his side, on the dovish side, but there's vocal opposition from Germany and from other countries. And Germany is the strongest and biggest country. So he'll have to find some middle ground, okay? Not committing to anything, but saying that something perhaps about the exchange rate. Anyway, it will be very, very interesting. I don't have a clear scenario. I can't tell you, okay, I think Draghi will hit the euro hard or lift it hard. But I do believe that we have a very, very frustrating range. Let's get back to the chart. Okay. We have a very, very frustrating range. And I think we will see some kind of breakout out of this range. We could also see choppy movements in both directions before we get a clear picture. Remember, euro remains a safe haven currency because of all that Draghi did. It means if the message is very, very balanced, it can allow the euro to strengthen because the mood in markets is quite negative. And he would need to say something a bit more dovish in order to weaken the euro. Of course, if Wall Street opens today with a very big cheer, then it'll do the work for him because euro dollar will fall, but I don't expect that to happen. So you will have some stabilization, but not a reversal so far. I think we will need to hear from the Fed before some kind of the Fed gives up on more hikes before markets really turn around. Okay, let's see if we have more questions before talking about other things. Talked a lot about Draghi. Yeah. What will move markets more, the rate decision itself or the press conference? Clearly, the press conference, because nobody expects anything in the decision itself. We might see a 10 pips, 20 pips up or down, but well, assuming that we don't have any news from the decision, because we had news last time of the cut of the interest rate. We had in the announcement, Draghi said, in the ECB released a statement saying we cut the deposit rate by 0.10 points, and we're going to announce more measures in the press conference. Now we're expecting to hear no change and no hint about the press conference, okay? If we have any kind of surprise there, and I think the chances are close to zero, of course we'll have the euro crash immediately, because if there is any change, it'll be only to the dovish side. The change we can have is either in the deposit rate, extremely unlikely, or something that they'll a hint in the to act in the press conference. Very, very unlikely. I would well, it's important to stay tuned, of course, but the big event is at 1:30 GMT, and it's a rolling event. That means he'll have an initial statement to assess the state of inflation, the state of growth, credit conditions, things like that, and what the ECB intends to do. And in many cases, the statement can be relatively bland, but then at the press conference, he makes this dramatic pause and releases some surprising statement that hits markets hard. Okay, so it's always a drama. It usually lasts 1 hour until 2:30 GMT. Okay, anyway, levels to watch: 109.50, weak resistance, not really there, I would say anymore. 110, 110.70 to the upside, 108, 107.10 to the downside. He'll be limited with what he can hint, but I think he will not miss an opportunity to participate in currency wars, because not participating means losing. Okay. Yeah, those are support and resistance levels. Answer the question. Where do you see euro pound going, to your opinion? All depends on the ECB. Yeah. The easy answer is it all depends on the ECB. Pound weakened a lot in the recent week. Euro remained stable on expectations and tension towards the ECB. But the pound was hit hard by Mark Carney and some weak figures last week. Figures in the UK this week were actually not that bad. So this might be a bit overstretched. Maybe you reached some kind of, wow, it's crazy levels in euro pound. Anyway, levels to watch on the downside, 76 and 75. The upside, I would say 77.40 remains resistance despite the small break, because in the past it used to be a very strong support right here. So I would say 77.40 still remains as resistance. Nothing from the pound today. It's all about the euro. Okay. To what audience will Draghi be speaking at 7:45 tomorrow morning? He's speaking at Davos at the World Economic Forum. All the rich people of the world are meeting in a super secure place in the Alps, in Davos, in the Swiss Alps. It's the annual gathering. They have on their agenda the fourth industrial revolution, technology and things like that, but I'm sure they're mostly talking about what's going on currently in financial markets. Okay. You see many reports from Davos, from the World Economic Forum. The leaders are talking there. It's quite close, actually, to Frankfurt, the headquarters of the ECB. To define, I see a question here from Ryan. To define a currency war, this means countries fighting for lower exchange rates through added stimulus and lower interest rates. Exactly. It's also called bigger than neighbor policy, if you see it in the financial press. Or basically the idea with currency wars is to have a weaker currency because it supports exports. So if the euro weakened a lot in the past year and a half, okay? Even with the recent status as a safe haven currency, the euro is much weaker. This means that the excellent Spanish wine that we drink here is now more accessible to British consumers. That the German cars like BMW and even Volkswagen are cheaper to American consumers, for example. That's the main idea. For the ECB, it cannot say that directly. It cannot say we're helping just the economy. They say that they're more, they're not talking about the exchange rate, they're talking about adding more stimulus to make credit conditions easier, to make demand for credit and investment higher. The outcome, of course, the best transmission mechanism, one of their preferred keywords, is that the exchange rate is weaker. And this also helps them with their only mandate. The mandate is higher inflation. Sorry, the mandate is 2% inflation or a bit below. And of course, headline inflation is 0.2, even core inflation is 0.9. So with more expensive imported goods, it's not only oil, it's also other stuff, they can see inflation moving higher. The big fear of the ECB is what happened to Japan, is the deflationary mindset, is that, okay, if prices go down, it's generally good, especially if oil prices go down, because you have more money for other stuff. But if you think all the time that prices will go down, you will defer buys. You will not buy a new fridge, a new car, a new bottle of Spanish wine, okay? You'll wait for the price to go down, okay? Maybe food is not the best example, but a car, a fridge, or things like that. And then the factories that produce it produce less because they have less demand, and then they fire workers because there's no work to do, and then these workers get less money and they have to, and they buy less. And so this is kind of this deflationary spiral which they want to prevent. In the United States, there's less fear of that because the unemployment rate in the United States is much lower. That means extra cash in Americans' pockets is used for buying other stuff, and there's much more consumers feeling there. And in Europe, despite the recent improvement, the unemployment rate is still very high, okay? Still 10.5%. Still very sluggish growth since the financial crisis. About currency wars, there was a cover from The Economist. Have a look at this. I cannot see this. I think it's gated. Anyway, The Economist, I don't always agree with. I see it. I can see the article. Lose or win. Okay, have read it later on. The Economist don't always agree what they say, but they have excellent mind opening articles. Okay. Let's talk about more charts. We didn't talked about Draghi so much. Talked about pound dollar. The chart is stuck. Let me try to refresh the screen. Here we go. Dollar yen at 117. So 118.30 is resistance. 116 seems to be perhaps the new line in the sand for the ECB. I was talking about 115, but we've already heard from them at 116, maybe to prevent the pair falling to 115. Another question here. I noticed yesterday that after the inflation readings from the US and euro dollar hardly moved, no more bulls in the market. No, I think that the inflation figures came bang on expectations, so it wasn't enough to move markets. So that's the main reason. And also specifically for the euro, it's a bit stuck towards the ECB's decision today. It was stuck yesterday. It might begin moving before the event on nervous traders' actions, but of course it'll move more when Draghi begins talking. Dollar CAD, 144.40, 146 is some kind of resistance, and 147 even higher resistance. It all depends on oil prices today, after we heard from the Bank of Canada. So there is a chance that we topped out in dollar CAD because the Bank of Canada didn't cut, but it depends a lot more also on oil. And remember, the Bank of Canada did enter the meeting with an easing bias, but they heard from the government that the government is ready to announce more stimulus. So anyway, the battle is on for dollar CAD. Aussie dollar showed some first signs of resilience in the past. Look at this nice range trading. So I would say that we have some kind of double top here. It's a bit more choppy than it used to be, but 69.55 is some kind of resistance. Now the pair is in the middle around the battle line of 69. Found some support at 68.30. We did see Chinese stock market slide, but new stimulus from the People's Bank of China helped the Aussie find some balance and move up in Wall Street. I mean, at the end of the day, the small recovery helped. 68.30 to 70 or 69.50 is resistance. New Zealand dollar also on a recovery path. Not all is terrible in New Zealand, but this week we got bad news from the CPI and also milk prices. So we're off the lows of 63.50, currently 64.25, resistance at $65 Swiss. Swiss franc weakened, I think, because of action from the S&P, perhaps to mitigate something very bearish from the ECB. Maybe they're fighting ghosts, I don't know. Anyway, we're just about parity. The more important pair to watch for the Swiss franc is Euro Swiss. Look how we moved up one range quite mysteriously. When there's doom and gloom, usually there's demand for the Swiss franc, but when the Swiss National Bank wants a weaker franc, the franc is weaker. So 110 is resistance, 109 is support. Very narrow ranges over there. We talked about euro pound. Euro yen leaning towards the lower end of the range because of a stronger yen, but Japanese don't like that. So we have some kind of resistance. Some kind of bounce back up. The range for me remains 127 to 128.75 or maybe 129 if you wish. The next move depends all solely on Draghi. The dragon, the Gepi, this crazy cross, 165.70 this morning. it found some kind of support there at 163, 164, 166 and 167 are resistance lines. The big fall in the pound this week and then the strengthening of the yen, they all went in one direction. Currently, we have some stability in the pound and some bounce up in dollar yen, so the pair is a bit higher. And oil prices, well, maybe we're back to gloom once again. It's leaning lower, a bit lower on the day. We already fell to much lower levels. Anyway, we're at the lowest levels since 2004, 2003. This is of course part of the big global picture. The doom and gloom, weaker oil, weaker stock markets, worries about China. These are the main themes, okay? There is a question, of course, about what the Fed will do next week. The Fed is not expected to act because there's no press conference and it just raised rates and they're doing it gradually. The question is, will they hint that they'll have a long pause or perhaps it's over? Or will they stick to their guns? Inflation says that they will continue. I mean, inflation is looking better. Employment looks good. These are the mandates of the Fed. But can they ignore the weak retail sales, weak manufacturing sector? And it's not only the United States. A weaker China it could also have an impact. Of course, we'll talk about the United States and the Fed decision next week. Today, it's all about Mario Draghi and the ECB. Okay. Any questions? Let's look at euro dollar. Very, very much in range. I would say quite stuck. I'll use this spare time just to say that the FX Street announced its Forex Best Awards for 2016. I'm glad and honored to be one of the candidates. So you can, I would be glad if you could vote for me or vote in general. There are also other great candidates, nominees, sorry, and it's published on FX Street. And that's it. So a question about Draghi, is there a link where Draghi broadcast live? Yeah. Yes, there is. Let me find that immediately for you. It's usually easy to find because you can find it directly on the homepage of the ECB. Yeah, here you go. In the meantime, you can enjoy their music. Let me stop that. Okay. So you can watch. So here's the link for the ECB. Yesterday's inflation results came out as expected because they were only confirmation, only the final read for December. We already had the initial read, which was weak. So weaker inflation says, okay, the ECB should hint about action, but other things like, well, it's only oil prices, we already did a lot, work in the other direction, okay? Where can you vote for me? And for the other people, it's not only me. Here's the link. Why is it? There you go. Thank you. Hope this link works well. Any vote is welcome. It's there's a popular vote and a professional jury. Also honored to be part of the professional jury, and of course, I could not and did not want to vote for myself. So it's not rigged. Don't worry. It's not. It's not a leak that impacts currencies anyway. So anyway, that's the link. Any more questions? Any more currency pairs? And we will get to the wrap up for today. I think it's time. The vote is for the Forex Crunch team. Yeah, I'm nominated in 2 categories. One is the whole Forex Crunch team, and one is me as a speaker. No, I don't get free beer, although I must say the guys at FX Street are, each time I meet them, they're quite generous, and they did invite me for beer here and there, and I invited them as well. No party. No, it's just it's something I can take pride of and put on my website if I win. There's nothing physical, but it's quite meaningful because FX Street is the leading Forex portal. So that's why I published it also on my site, because I would be honored. I'm honored by the nomination, and of course, if I win anything, it'll be even better. Anyway, let's do the anyway. This is the wrap up for the live market open for Thursday, January 21st. Today is D-Day, Draghi Day, and that's the main event today. We're still in a doom and gloom atmosphere in markets, but perhaps the worst is already behind us. Yesterday we had some good news from the UK, a bit of a slowdown in UK wages, but the unemployment is down. That helped the pound stabilize after Carney said that it's not the best time to raise rates and hit the pound quite hard beforehand. US core inflation went up as expected. Other figures were mixed. 2.1%, that's in theory good news. Another sort of good news, I mean, not going extremely dovish, was the Bank of Canada. It surprised or partially surprised by not cutting the interest rate, left it at 0.5%. It enabled the Canadian dollars to strengthen. They're waiting for stimulus from the government. They got a hint that the new government in Ottawa is about to enact stimulus, and also the weaker CAD is already doing their job for them, so they're keeping their ammunition dry. Okay, and but we did hear from the Bank of Japan talking a bit about more stimulus, and also from the government, because they're nervous about the strength of the Japanese yen. These safe haven flows are perhaps too much for them, making their exports uncompetitive, and they don't need such a strong yen, especially as oil prices are low. Okay, that's it. And yesterday we had a crash in stock markets, but it didn't in United States. Eventually we had some big bounce on the just towards the finish. That's why the worst may be behind us, but probably not. In Asia, we had the Chinese authorities, the People's Bank of China, inject more cash into markets, but stock markets were still down also in Asia. So they were down, Asia down in the United States, but it could have been worse. Okay, let's look at a few charts. Euro dollar is tense towards the ECB's decision. Let's talk about that in brief. The ECB is not expected to change policy, but it might give us a hint about what it'll do in March. It's sort of a mixed picture. On one hand, inflation is lower and global markets look worse. On the other hand, the ECB already did a lot, and there is opposition from within. And the ECB also would not like to give us big hints that it cannot fulfill later on after that big disappointment in December. All in all, it's a very open picture. No changes expected. Follow the live coverage on FX Street for everything you need to know. It'll be quite an interesting press conference at 1:30 GMT. Other events for today. Well, it's mostly Draghi today, but also in the United States, we have jobless claims as in every week, and they're expected to be more or less the same, around 280. Philly Fed index, it's going to be bad because we know manufacturing is poor. For the Canadian dollar and for markets, once the echoes from Draghi move away, we have the crude oil inventories. It'll impact the mood. Too much oil will have weaker, will weaken the Canadian dollar, but also sort of exacerbate this risk-off mood. And just before the show tomorrow morning, Draghi will have an opportunity to talk again. Maybe once again he'll do some kind of damage control. He'll be speaking in Davos, Switzerland, at the World Economic Forum with all the rich people in the world. Okay, let's look quickly at charts. Levels to watch at Eurodollar. On Eurodollar, 110, 110.70. On the downside, 108, 107.10. Pound dollar, 141.20 to the downside, 142.25 to the upside. Currently balanced, nothing from the UK today. Dollar yen, look for more talk from Japanese authorities. Around 117, 116 to 118.30, I would say, is the wider range. Dollar CAD finds here really nice support at 144.40. 147 is high resistance. If oil prices continue falling, the sky is the limit for dollar CAD. Aussie dollar showed some strength. 69.50 emerges as resistance, 68.30 as support. Look for news from China overnight. Chinese stock markets have the biggest impact. New Zealand dollar got a few blows this week from the CPI and from milk. 64.25, 65 is resistance, 63.50 is support. Those are the main currencies, of course. First and foremost, left, right, front and center, or whatever that expression was, it's the ECB, it's Mario Draghi. Worries about inflation, readiness to do more, worries about the exchange rate will all weaken the euro. An approach that of a wait and see, on the other hand. We already did enough. Not afraid of deflation will, of course, strengthen the euro. I look for something in the middle, and I find it hard to project where exactly in the middle that will fall. My only guess would be that we're currently trading in a very frustrating range. For example, this morning, around 50, 60 pips, and I believe the ranges will be much wider than that around the press conference. Okay, so hold tight. I don't think we'll have what we had last time, this huge leap. Of course, there is Morgan Stanley that said buy Eurodollar to and ride it until 113. There's always a possibility over there. And there's also a possibility that we'll have a crash. If the ECB tells us it'll do more to battle inflation, do whatever it takes, and it includes, it intends to cut the deposit rate, announce more QE, and but we're probably going to have something in the middle, which will cause lots of action. Anyway, stay tuned for the coverage on FX Street. Valeria, Mauricio, Dale, and myself will cover the event, explain what's going on. Draghi drama always provides excellent headlines and excellent moves on Eurodollar. Okay, so I guess that's it for today. We have another dramatic day in markets. We had so far this week Chinese GDP, which was interpreted in both ways. We had Carney hitting the pound. We had Pelosi lifting CAD. Today we have Draghi, and tomorrow we have more from Canada and from the UK after a dramatic week from central banks. Okay, and we'll be here tomorrow, of course, also with the preview of next week and explaining Super Mario, Dr. Draghi, whatever you wish to call him. He is a very powerful player in global Forex trading. Okay, so that's it for today. Wish everybody a safe and successful trading day. Thank you for the great questions. Thank you for coming, and see you tomorrow. Thank you, and bye-bye.